Hello there. Welcome back to Accounting Space. This video, we want to look at the April 2021 common test, and we are going to look at a question paper from the province of KwaZulu-Natal. So we are going to start on our first question, that is our question one. Report us to spend on our information below. Relates to More River Limited at the financial year ended on 28th of February 2021. So this is More River Limited. So it's the statement of comprehensive income, that is the income statement uh, for 37 marks. So that's where we are going to start. So going to our other section where we have our uh, as we go through our questions, the trial balance from 20th February 2021. So very important for you to take note of it. So you see that our this financial year is ending 28th February 2021. So obviously it started at the previous year, and that is on 1 March 1, 2021. So very important for you to take note of that. Then we go to this, just need to browse through before attempting the question. So we go beneath that, you see that you're given adjustments and additional information that as well you also need to go through before you start answering the question, so that you familiarize with the adjustments that are needed. Remember, as we go through your statement of comprehensive income, some items will need some adjustment. So when you go through before you start answering the question, you can easily in terms of you can easily allocate where the adjustment is and try to adjust in your other section. So we go to the next information given on the next page. We see that we've got information E. I go down to information L, which is going to be the last one. So this is what we have. So obviously, according to our other section, you see that we are going to start with the sales, which is 8,800,000 as given in the pre-adjustment share balance. But we have some adjustments, obviously, that we need to take into consideration. So remember, on the nominal occupancy section, that's where we find our figure of sales. We have 8,800,000 being pre-entered. We have it there. Then we check for early allowances, data allowances. We see that we've got data allowances here, which obviously is going to reduce our sales figure. So I will need to subtract data allowances, 19,200. So go to our answer section and we subtract 19,200. So from there, you can go to the next item that we have that might also need to be adjusted for the sales figure. So if you go there, you see that we also need to go through additional information to see if we have got anything that is going to adjust our sales figure. So you'll see that if you go to our information B, it reads a credit note for 49,600 issued to a debtor as an invoice. So we take note of that. So remember, this is a credit note. It has to reduce the figure for sales, but in this case, it was recorded as an invoice, so it was recorded as a plus. In other words, we are saying uh, we are supposed to uh, subtract it from the addition part that it was. Remember, an invoice increases the amount of treated as a credit note, whereby it's going to have an effect of a reduction on our sales figure. So first we subtract our 49,600 and then back to zero. And then we put the correct figure, which is 49,600. So we are going to subtract 49,600 twice. So basically, if we say 49,000, it means we are going to subtract 49,600 twice. We add so in total, it's going to be a minus 99,200 that we are going to make on our sales. So I will go again and subtract what 99,200. We might have further adjustments that might be needed to adjust ourselves. We also need to go through additional information by additional information given we no longer have anything that is going to affect our sales. So in that case, we close our bracket and calculate the net figure that we get there. So if you say 8,800,200 minus 99,200, you get a net figure of 8,681,600. So here we are going to have 8,681,600. So basically, this is what we have. Then I believe that, remember, we have to subtract this figure for cost of sales. So we go to our information given, pre-adjustment trial balance, and try to see what figure we given as our cost of sales. So see that cost of sales, we have it here, and we are seeing that we are given it as a question mark. So when it's a question mark, we know that we are supposed to find it. Either we try to calculate it or find it as a balancing figure. We check the given information if we have got any anywhere that we can get information that is going to lead us to cost of sales. So if we go down, you'd see that we have on the first point that is going to be our point A. We can check what we have in terms of our point A. So our point A reads a business prices is goods at a markup of 60% of cost. Trade discounts of 360,000 rands was allowed on invoices to certain customers. So basically, it means at the rate of markup. So that becomes simple. So we can just maybe try to put down the formula that says our cost price plus our markup gives us our cost price represents our cost of sales. So what we at our markup, which is given in this question, is 60%, and then obviously our sales becomes so basically this is the proportionate representation in terms of the element that we have in the formula. So in that case now, we now make a simple proportion whereby you're saying the figure for sales is the one that we are given that is going to represent 160%. But if you go to our the first statement, the second statement that we have said trade discounts of 360,000 was allowed in invoices to certain customers. So we take note that trade discounts are not are recorded in the books of accounts. Or we can simply say they are not shown in the books of accounts. So if trade discount is not shown in the books of accounts, it means on our net sales figure, that we calculated, which is 8,681,600. There it was already reduced by 360,000. So we need to add 360,000 back to our figure for sales, and then the total that we get now is now a representation of our sales. Then we can make our proportionate calculation there. So if you go there now, we are now seeing the figure that we have for our net sales figure, which is 8,681,600. So we say 8,681,600, and then we add 360,000 for our trade discount. So we can simply make that calculation to see what we get there. So if you calculate there, let's try to see. So we can just try to come up with the correct answer from that calculation. So we are going to get our figure is 9,041,600, and now it's a representation of our sales. So we just make a simple proportionate there calculation by saying 9 million with our sales, whereby it's what 60%. So say what 60 is 600, and then which is represented by this is the question mark. So it's just a simple. What we don't have is 100. I'll make it a denominator, and the numerator represents 600. That we're just going to make as our calculation in brackets for cost of sales. So we go to our other section. So for 9 million, 9,041,600, and we are multiplying and then close our bracket. Then the final figure that we're supposed to get is now 5,651,000. 5,000,600 to subtract in brackets so that this is a subtraction. Now we are now saying our sales get there. Here's our gross profit, 3,030,600. Operating income section. So remember the total for other operating income should be at least end to get the total. So we go to our question to try to look for other operating income that we have. That's why you're going to find the figures for the operating income. So going down, you will see that the first income that we see there is rent income. It's 70,500. So we now check in terms of any adjustment that is going to affect our rent income. Remember, the rent income that we have in the pre-adjustment share balance under the nominal account section represents the actual rent that was received, the actual amount that was received for rent. So, but it doesn't mean it belongs to that period. We have to prepare our statement of comprehensive income by complying with the matching principle or the accruals principle, which records the amounts that exactly relate to that financial period. So we, after having identified that we've got 70,500 actually received, we need to see if there are any adjustments in terms of prepayments, in terms of accrual, so that we can adjust and we are left with the actual amount of net income that belongs to that period. So in this case, we can go to our additional information to see if we have got any adjustment. That is going to just try to go item by item and try to see if we have anything. Remember, you answer the question, so you'll be knowing if we had come across that adjustment of rent income. So in this case, you'll see that we do not have anything. So in that case, if you do not have any adjustment, it means that the rent income that we have in the trial balance represents the rent for the period. So we've got 70,500 that we need to put as our rent income. So here we are saying rent income. So basically, this is what we have. So up 1,500. So in this case now, we try to identify again in other income that way. So remember, we've got some items that for other operating expenses are depending on the information given in the question. So we've got the issue of we can try to break them down. We have the issue of provision for bad debts adjustment. Provision for bad debts adjustment. It can be under income or under expenses, depending on the question. Remember, if it's an increase of provision for bad debts, it becomes an expense, then we are supposed to put it under expenses. But if there is a decrease, depending on the question, we are supposed to put it under income. So very important for us to go through the provision for bad debts adjustment before we leave at the other income section, so that we can know that if we are supposed to put it under the other income section. Surplus or deficit, surplus or deficit of trading stock. So remember, if it's a surplus, it's just to go under deficit. It is to go under expenses. So we can as well try to check for these two items. So in that case, we can start with checking our provision for bad debts adjustment, whereby we are saying we calculate the provision for bad debts for the current period, and then we compare it with for the previous period, so that you can see if there is an increase or a decrease. So in this case, if you go to additional information D, we are told that the provision for bad debts must be adjusted to 5% of the outstanding debtors. So basically, we have 5% of outstanding debtors. So we need to calculate the outstanding figure that we get. We multiply by 5% to get the level of provision for bad debts for the current period. So we go to our pre-adjustment trial balance, and you see that the debtors figure that we are given as our debtors control is 186,000. So we are going to say 186,000. And then we check for any adjustments in additional information that is going to affect that data. If you go to B, we've got a credit note for 49,600 issued to a debtor dated 25 February 2021 was reported as an invoice. So we remember we subtracted 99. We subtracted 99,200 as we said. This was an invoice, but it was supposed to reduce the figure for debtors. So 49,600 plus 49,600, you get 99,200, and then we are supposed to subtract it from the figure that we have there, whereby we are saying minus 99,200. And then check for further adjustments. Just on top, we've got a debtor, Z Newton, with an outstanding balance of 42,000 rands. He has left the country. He could, his account must be written off. So we have got a further a bad debt that we have there of 42,000 that needs to be written off. So it means it's also going to reduce the figure for our debtors. So here we subtract again 42,000. So we can just calculate so that we get the net figure that we have there. Let's see, 186,000. And then we subtract 99,200. And then we also subtract 42,000. So if you do that, you are going to get your answer is 44,800. So this is going to be the net debtors balance. Then that's the balance that you are going to use to calculate using your 5%. So we are just simply going to say 5% is 5 over 100, and then you multiply by 44,800. You see what we get. So 44,800 times 5% as a decimal is 0.05. And we get it as 2,240. So this is what we have. Then with the figure given as 2,240, we now check the level of provision for bad debts for the previous period. We get it in the pre-adjustment trial balance. So if you come here, you'll see that we've got provision for bad debts that is here. 3,240 is for the previous period. We have it here. So we've got 3,240. And then it moved to, for the current period, 2,240. So we see that this is a decrease. So it's a decrease of, I think, 3,240 minus 2,240. So that decrease represents an income. So remember what we have put here, that if it's a decrease, it's under our income. So we go and summarize that working. Other section whereby you're saying in brackets, 3,240. So basically, that's what we have. Our provision for bad debts adjustment, we are putting our calculation in the wrong row there. So we are saying provision for bad debts, adjustment. So we can just create some space whereby now in brackets we are saying 3,240 minus 2,240. So with that calculation, we are going to get 70,500. We're going to get our calculation is 1,000. So this is 1,000. Basically, by saying 3,240 minus 2,240, you get your answer is 1,000. So this is what we have. Then we try to check again. Remember, we've got another adjustment that we need to make sure that it's not part of our other income section. We have got surplus or deficit of trading stock. So to calculate it, we are simply just going to say our book value minus the physical stock count figure that we have. So if you get it as a positive deficit, it represents a deficit. So we are saying if it's a positive, it's a deficit. If it's a negative, it's a surplus. So very important for us to take note. So for our book value, we get the book value in the pre-adjustment trial balance. So we can just refer back. We see that the figure for trading stock that we have is 1,050,300. So we are saying 1,050,300. And then from that figure, we can now be able to see if there are any adjustments that are going to affect our book value. So we go back there, we see that we have got an adjustment of this credit note of 49,600 issued to a debtor dated 25 February 2021. So remember, it was recorded as an invoice. So we calculated and we saw that it was 99,200, as we said, 49,600 plus 49,600. So this was a credit note. It was these are goods that we are supposed to go back to our trading stock, but they were not recorded as going back to our trading stock. It was recorded as goods that were going out. So basically, we are going to do the opposite, whereby we are going to increase our trading stock. So basically, that's what we have. So from there, we can now calculate. Remember, when they go back to the trading stock, they go at cost price. So basically, we go back to that calculation, whereby the proportion calculation of the same cost price plus markup is close to our selling price. You know that this is 100, and this is our 60, and this becomes our 160. So in that case, our selling price. So we are saying 160 is the cost price, which is 100. So a simple calculation by saying, I want to not have 100 or 200. We see what we get there. So we can just try to calculate that. So we can try to find out what we get. So by calculating, you're going to see that you're going to get your answer is 62,000. So here, your answer is going to be 62,000. So it means this is going to be, this credit note is representing goods that are going back to trading. So we add 62,000. So we come here on our calculation and we say add 62,000 to get the. Then we compare with our physical stock count figure. which we can always get, additional information is our closing trading stock figure, which we are given here. Information E, physical stock taking on 28 February 2020, reflected the following stock on hand. Trading stock 1,002,000. So we compare with that one. So we come here, we subtract 1,002,000. So from that point now, we can now be able to find if it's a surplus or deficit by trying to see the final answer. So if we calculate there, you are going to see that the answer that you are going to get is 110,300, and it's going to be a positive, which is a positive here, which is a deficit. And we said if it's a deficit, it should be part of our expenses. So it means we are not going to put it under other income, but income section. So in that case, it means we have finished in terms of our other income that we have in the question. So we can proceed by trying to add so that we get the total. So that we get the total for other income by saying 1,000 plus 70,500. 1,500. And this other operating income, we are supposed to add it to our gross profit to get our gross. Yeah, it now becomes our gross operating gross. If you add there, it becomes gross income. So here we've got gross income. So by saying 71,500 plus 3,030,600, then we get our gross income, which is supposed to come here. Of course, we have it pre-entered. We can just maybe remove this. So in that case now, if we add the total that we are supposed to get should come here. Yes, our gross income is 3,102,100. So basically, that's what we have in that case. Then from there, we're going to the operating expenses section. So the total is supposed to come on salaries and wages. We have 681,600 be pre-entered. So obviously, this is the figure that is shown in the pre-adjustment trial balance. We can just infer there is our salaries and wages. We see that salaries and wages, we've got 681,600. So from there, we check adjustments affecting our salaries and wages. So we can try to go item by item. But if you come to F, we are being told that one employee received a double salary by mistake from salary best. The employee made a direct deposit to the business account as a refund on 20th February 2021. These normal salary details are as follows. So it's a double salary, but the salary of the person is given. So we need to find the gross salary, and then we are supposed to obviously we subtract it because it was a double salary. So we subtract from the total of wages and wages. Remember, it means this total of salaries and wages is greater with that amount of salary. So we have to subtract it. So beneath that says employers' contributions are part of salaries and wages. So it means we also have the employer's contribution here, which we are also supposed to subtract of 4,000. So our gross salary plus deductions. So basically, this is a calculation for gross salary, net salary plus deduction. So our net salary is 15,000. Our net salary is 15,000. So we're going to say 15,000. And then we add our deductions. We put our deduction in this section, 2,000 plus 3,000. And then the total that we get there is going to be 20,000. It's going to be our 20,000. So basically, we are going to subtract our 10,000. Then we subtract also 4,000. So we go to our answer section, our gross salary. Then we subtract employer's contribution, which is 4,000. And then from there, the net figure that you are supposed to get is 657,600. 657,600. Then the next is advertising, 60,000. So obviously, 60,000 is the figure given in the adjusted trial balance. And then we also need to look for any adjustments. So we see that advertising is the figure that we have, which is 60,000. And we are seeing it here, is 60,000. So we look for adjustments affecting our advertising. And we try to proceed to our next page and see any adjustment. So if you come to information G, we have got an adjustment affecting our advertising. It means advertising of 40,000 rands consists of a month-to-month contract with local radio station. advertising was paid for 13 months from 1 November 2020. The contract rate was decreased by 10%. So we see that we've got two phases that we have there. Before the rent was decreased and after the rent was decreased. So we need to count the number of months before the rent was how much? 1 March, that's April, May, June, July, August. Then I will count number of months because we've got 8 months before. Then after, it means November, December, January, February. That's where the year is ending. March. Okay, this is after. So after having taken that into account, we can now come up with a formula that is going to lead us to 40,000, as we are told that advertising of 40,000 consists of a month-to-month contract with the local radio station. So basically, we are saying before we can let our monthly rental it goes to say 8 months before the one after. Remember, after decrease, it decreased by 10%. So if it decreased by 10%, we are then it decreased by 10 as a decimal. It converts to 0.9. So basically, we are saying in bright times our 5 months that we have 0.9, the total for the advertising, which is 40,000. So here we come here. In case we just assume equal to our 40,000. Now, by first now we do and you see that our RIs we're going to get it as let's just say 40,000 divided by 12.5. You're going to get it as 3,200. 3,200. So in that case, we know that the extra month that we are saying is the one that we need to remove. Remember, it was for 13 months, which means the March 2022 month is the one that we are supposed to subtract. And in March 2022, that's when it had already decreased by 10%. So it was now 0.9 R. So our R is 3,200. So to get the rental for March, 0.9, which is simply 0.9 R. And then we see what we get. We're going to get your answer as 2,880. So basically, this is the total that you the product that you are supposed to get there. So this is one that we are supposed to subtract from our advertising. So going to our answer section, we are going to say 2,280. 2,880. So we can just try to correct that. Yeah. 57,100. I remember we put the bed just that that time we can just refer down. You see that we've got a data set Hilton with an outstanding balance of 42,000. So this one was written off. So we need to edit to get the total of our data. So here we are saying our debtors we add that the total that we are supposed to get. Packing material, what we are supposed to do is we are going to say if we have any packing material that we have at the beginning of the period, we add it to packing material that was purchased during the period, and what was purchased during the period, we find it in the pre-adjusted trial balance. Then the total that we get from there, we subtract with if we have any packing material that is still remaining at the end of the period, and that is our closing stock of packing material that we get into in the additional information. So this is exactly as we are going to calculate it. We go to our, but we see that we've got consumables on the end. We've got packing material on 1 March 2019, which is obviously the packing material that we had at the beginning, 820, and we added the packing material that was purchased during the period, which we are given as 15,000. And then the other that we get, you subtract it packing materials at the end, which we get from here, which is packing material 6,020. So that's how we are going to calculate it. So we come here, we say 15,000, and then we add our 800. What is, and then the answer that we are supposed to get is 9,800. Pre-entered figures. So we have to look for other expenses that are not listed in our answer section. So we go again to our list of balances that were given under nominal account section, and we start to go down looking for other expenses. You see that we've got director's fees, which is 550,000. So before you enter your 550,000, you need to check if you've got any director's fees adjustment that we have in the additional information. Check, go down, but you see that we've got no other adjustment that is affecting our director's fees. So it means we are going to take our director's fees as 550,000 in our other section. So here we are saying fees, and the amount that we have for director's fees is 550,000. So we come here, go there. We check for other expenses that were not listed. So from director's fees, let's go and see 8,410. I will check again its information if you've got anything affecting our audit fees, but in this case, you see that we have it 188,000, 188,410. Then we check again in terms of another expense that we might also have. We check from audit fees, we go down salaries and wages, we've already entered that one. Advertising, we've already entered that one. Then we got insurance, which is 14,700. So we do not have any further adjustment for insurance. Again, you can as well check. So we take the figure as it is. So insurance, 14,700. We did calculate for trading stock. Remember what we said? It was 1,050,300. 1,050,300, and then we added our 62,000. We added our 62,000, and finally we subtract our trading stock, which is 1,002,000. We did calculate this when we are on the other income section. So the answer that we got, was 110,300. So basically, this is what we have in terms of our trading stock. And then we try to go to look for other expenses. That we see that we have got our standard expenses that which we can put as last one, since it's a question mark. So if it's a question mark, it means we are going to get it as a balance figure. So we are going to leave it blank. So we can just represent it as our standard expense. And then we are saying we leave it blank here, since we are saying it's a question mark. So we get it as a balance figure. But lastly, we've got depreciation. Remember, depreciation will not be stated in our pre-adjustment balance. But come here, additional information. We can just try to H. That's where we've got something to do with our depreciation. So on H, our release make profit at 50% on cost price. And then secondly, on credit on 1 June 2020 for 60,000 rands. This has already been recorded. If it has been inside the figure of our equipment. So our 60,000 it was already been recorded. Depreciation of vehicles. So we can just say. So on vehicles, I remember it's on cost price. So the formula for times cost. So we're given the percentage is 0.15% per annum. So we can adjust cost of vehicles that we get in the additional information. The cost for vehicles is here, which is 800,000. 800,000. So here we are multiplying by 800,000. So from that calculation, we cannot be able to find our depreciation on vehicles. So we're going to get it as 120,000. Vehicles, you need to check the net book value. Remember, the depreciation using costs, usually you are going to see that the depreciation amount will be greater than the net book value or the carrying value. So if we have such a scenario, we cannot have a scenario whereby depreciation amount for the period is more than the carrying value that is there. If it's more than, it means it's not possible. We are supposed to reduce the depreciation so that it becomes lesser by 1 rand of the amount of carrying value, so that the carrying value at least becomes a 1. So in this case, we can check carrying value of vehicles according to figures given in the trial balance. You see that vehicles we have got cost 800,000. And then we subtract accumulated depreciation of vehicles 680. Then we can subtract from there. So if you calculate there, you see that the figure that we're going to get. Let's just try to calculate it. We're going to get it as 120,000. So we are saying here we have got 120,000. So having 120,000 for the period, which is possible. So we are supposed to create a net book value, which is approximate. So we take note of that calculation of equipment, whereby we are saying the equipment is saying on equipment at 10% per annum on diminishing balance. Diminishing balance is percentage on carrying value. So we come here and depreciation. So basically this is the calculation of it. So but inside our equipment, we've got equipment that came during the period of 1 to 2020 for 60,000. This has already been recorded. So we can start by calculating the depreciation for the old equipment before this one came. So this 60,000 is inside the cost that we have for equipment, which is 200,000. So we have to first remove it. 200,000 minus 60,000. So to get the carrying value minus what we are trying to do is we are trying to get the cost of the equipment that was there for the whole year. Then we remove the 60,000 that came during the year. Then the net figure that we get, we subtract now the equipment we are given minus here we are just calculating the carrying value. So in that case, let's try to see what we get. We'll say first we're going to say 200 minus 60,000. Then we get 140,000. So you subtract 37,000. There and 3,000. So this is the net book value of the equipment that was there for the whole period. So 10% on equipment here, 10%. So now we are saying the 103,000 that was 0.8 it's equipment it was purchased for 60,000, so it's 60,000. Calculation in terms of the number of months that it said it was there from 1 June 2020 July. So we multiply by 9 over 12 to get the proportionate in terms of the number of months. 9 over 12, we see what we get there. So if we calculate, let's just try to see. We are going to get it as, we can just try to see, is 4,000. So total depreciation now is 10,300. And we see that the final figure that you are supposed to get becomes, you can just try to add there. Get it as 14,800. This is depreciation for equipment. Then we add it to depreciation for vehicles, which is 190,999. So come here. On our answer section, depreciation in brackets, we say 190,999. And then the total that we get is 134. 108. We can just try to verify that calculation by saying 119,999 plus 14,800. 134,799 total. So remember, sundry expense figure we left it blank, so we leave it like that. We're going to come back to find it as a balanced figure. So from there, find the figure for our total operating expenses, which is supposed to come in. Since we don't have the figure for sundry expenses, in that case again, we cannot find the figure for operating profit since we are the figure for total operating expenses is not there. So, but if you go to extra information, we try to see if there's any hints in terms of finding the figure for operating profit. We can just as we try to go to the next page. So if you come here, you see that on K is saying operating profit is 15% of turnover. So it's clear. We come here, we make that calculation by saying applied by the turnover amount, which is the figure that we already have here, which is 8,681,600. So it's multiplied by 8 million. So we multiply it like that. The answer that you are supposed to get becomes operating profit becomes 1,302,240. So from there, we can now go back now to be able to find our figure for operating expenses. Remember, to get our operating profit, we said gross income minus operating expenses, we got our operating profit. So to get this one again, we are going to say gross income minus operating profit. Then we get our operating expense. So in other words, we are saying 3,102,100 minus 1,302,240, and you get the total for operating expenses, which is going to be 1,086 from the figure for gross income. We still have a missing figure, which is our salary expenses, which we are going to say 1,799,860 minus everything that is inside our operating expenses. And then we are supposed to get a net figure that is supposed to come here as our operating expense as an amount of 28,000. So from there, we can now proceed with our statement of comprehensive income, which we are now under operating profit. So from operating profits, remember, we are supposed to adjust for interest income. So this deposit is our interest income, say 80,000 profit. So if you add it, you get the total of 1,240,000. And then from that case, you are going to get profit. So this is exactly what we have in terms of the description of that figure. Then after that, now after operating profit before interest expense, we need to have our interest expense. Again, we'll try to see if we can find the figure for our interest expense. We'll go down looking for it. You see additional information if you've got anything mentioned about interest expense. We see that we cannot find that one, but if we go to our adjustment trial balance, we can find it by going to the figure for loan, and you see if you've got a percentage there. See that it's one loan, 1,470,000, but no percentage in terms of our interest. So in that case, it means we are not given. So we leave it blank again, and after that, we are supposed to get our, if you submit, you get the figure for operating profit. You're supposed to get the figure for net profit before taxation. Since our interest is for taxation, we've got information given pertaining for taxation, which is we are given here on the last point, which is L. Income tax for the financial year was calculated as 360,000 rands. This is a 30% of net profit. So if you come here, you'll see that after get now the figure for net profit after tax here. There, in terms of proportionate representation, we are going to present depends on the question. So it means here our taxation is 30. We are supposed to be proportionate representation according to our question. So we can now simply get our figure for taxation, because already we are given that our 360,000. So the figure that we are looking for is we can look for the 1.4%. Our calculation is that. So calculate it like that. You see that the net profit before taxation 1,200,000. We are supposed to come into it here, and we are saying net profit before interest expense by saying net profit before interest expense minus our net figure here, which is supposed to be our interest expense, and it's 182,000 is what we have made. Obviously, this one we should indicate it in brackets so that it was a subtraction. So from there to get our tax, our net profit after tax, which is now going to be 840,000. So this is what we have, and this becomes the comprehensive income for the year ended 20th February 2021. So hopefully it was very helpful. But of course, our question is going to proceed. We still have another section, which is prepare the retained income note for the year ended February 2021. So we are going to the retained income note, which we are having here. So from there, we can now try to see in terms of the figure that we are supposed to start with. So from here, in our retained income note, we are supposed to start with the balance at the beginning of retained income. So here we are saying the beginning. Balance at the beginning, and the balance at the beginning, we can always find it in the pre-applicant one is 1,480,000. 1,480,000. So obviously, we also need to check additional information, anything that can affect our opening. So if you come to information I, that is on the last point, it reads 101 February above the average issue. The transaction was a case which is saying the transaction was properly reported. It means the balance that we are having, for retained income, that is in the statement of in the adjusted trial balance, that repurchase was already adjusted. Remember, a repurchase reduces the balance for retained income. So the balance that we want is the balance at the beginning before this repurchase was adjusted. So if we subtract that is the correct adjustment for the repurchase, we're supposed to subtract from our retained income. So we are supposed to add it back so that we get the balance in the beginning. So the amount of the repurchase above the average share price, even 140 times the number of shares that we repurchased. We have got 100,000 order shares repurchased, 140,000. So this is the amount of repurchase which we are supposed to add back to the balance that we are given for retained income at the beginning. So we're saying we're adding it to 1,480,000. So that's how we're going to adjust it here. We can just simply say in brackets, we're saying 1,000, and then the total that we are supposed to. Then we now readjust in terms of buyback of shares. Already calculated in brackets. I rewrite this calculation as our calculation in bracket 40 times 100 is a decrease if it's a repurchase above the average share price. So this is what we add our net profit. We already calculated in our previous statement of comprehensive income, and the figure that we figure. Now go to the section for order share dividends. So here we have got, and then the total of order share dividends is supposed to come here, but obviously we have our interim, and we also have our final dividends. So our interim, we go to the information given to check what does it say. So it says per share was paid on 30 August 2020. So 30 August, we are seeing that 30 August we had 600 shares were issued on 1 March 2020. Then between March and August, we see if there's anything that transpired. We see there's nothing. What transpired was on 1 September, which is after 30 August. So it means on 30 August, the balance of number of shares was still 600,000. So to get the dividend, we are going to say 30 cents of 600,000 shares. So we come here. We just in brackets say 0.30, which is our 30 cents times 600,000. And then the answer that we are supposed to get is 180,000. So this is what we have, and then we look for the final dividend. Final dividends, we are told that final dividends of 40 cents per share was declared on 28 February 2021. Shares bought back on 1 February 2021 also qualify for the final dividend. So we are not going to subtract the shares for repurchase. So we know that on 1 September, there were new shares that were issued. So we are going to say 600,000. We add the additional 200,000 shares issued, and then we get your 800,000. So we are going to subtract this 100,000 for the repurchase. Remember, a repurchase reduces the number of shares because we are told that final dividend. So we're going to use our 800,000 times 0.4, which is our 40 cents. So we'll come in. So in brackets, we are saying 0.4 times 800,000. And we calculate it like that, we see that becomes 320,000. Then from there, you can now say final plus interim to get your order share dividends, which is going to be 500,000, which is obviously going to be a negative. So to get our final figure, which is going to be balance at the end, so to get our balance at the end, we are now going to say 1,620,000 minus 140,000 plus 840,000 minus 500,000, and then you get your net figure is balance at the end of 1,820,000. So this is what we have in terms of our retained income. So we have got the next section that we have in terms of audit report. So we can proceed with our question. We can go back to our question to see. The next question is saying, to whom is the audit report addressed? Remember, the audit report written by external auditors, obviously to be addressed to the shareholders. So that's our answer that we are supposed to put there. We're saying it's addressed to shareholders. It's addressed to our shareholders. Then our next question is saying, other than shareholders, list two other parties that will be interested in the audit report of the company. Briefly explain why each would be interested. So you are going to see that potential new investors is another part. Potential new investors. And the reason why they are interested is to determine whether they can rely on the information in the financial statement. So to determine whether they can rely whether they can rely on information in the financial statement. So basically, this is the first the reason that we have the first part that it can be interested in the report. So obviously we can try to see. We also have banks, financial institutions. We can have also banks. We can also have banks being also to determine whether they can rely on the information in the statements when making decisions relating to lending the company money. So we can say when lending, when lending, the company, money, they would want to see if they can rely on the financial information. Let us say in the financial information. So in the financial information. So basically, that's what we have in terms of the parties that might be interested to know about the audit report in terms of the opinion that has been given. So we see that our question is 50 marks. So this is exactly what we have in terms of our question one on this question paper. So moving on to our question two, it's on concepts. So we are going to have 20 marks on this question. It requires us to spend on average 18 minutes. So our question is choose a description from column B that matches the concept in column A. Write only the letter A to F next with numbers 4.1.1 to 4.1.5 in the answer book. And our question is got column B statement, and we see in column B. So if you go to C, this reflects the profit of the company for a year. So we put 2.1.1, presenting it as our C. Then we move on to the next part. Explanations given, but if you like this, we got E. So we can go to the next question, which is now going to be director's report. So director's report, we got to explain the performance of the company in major decisions that were taken. So we have A as the correct response. 2.1.4. The independent auditor's report or not the financial statements can be relied upon. So we have D as the correct. Out of the second part now, which is now 2.2. We say the information relates to the financial year ended 20th February 2021. Of the required part, calculate the following amounts as it would appear in the cash flow statements. We have income tax paid, 4 marks. That's where we are going to start. So income tax paid, obviously, we need to open the SARS income tax account. So we just to know where do we put our balances. So remember, we are going to have in advance. It's supposed to be on the debit in advance at the beginning, and also we have an accrual at the beginning. It will be on the credit. So the opposite is true. We are saying in advance. At the end will come on the credit side as our CD. Then accrual at the end will come on the debit side there as a CD again. And then the amount of SARS of taxation for the period will come here, and it is supposed to go to it will be in the profit or loss or the income statement. That's why we see the adjustment take place. That is the tax for the period. So we can as well try to just simplify it by saying tax for the period. So this is the simplification that you can give. So the figure that we'll be looking for will be on the debit side, which is our bank. The actual one that was paid for SARS income tax. It's simple, whereby we also open another account, and finally we can as well try to bring it in the form of a formula, which can be an alternative way of calculating it. So according to information given, we are given it here, whereby you are given SARS income tax under current assets. So this one, it will be indicating in advance, which is 12,700 in advance in the beginning. If it's under current assets, it will come here. Or in our SARS income tax account that we prepared there, we can just replace beginning by saying if it's a current asset, if it's under current assets, and at the end if it's under, and if it's under current liabilities at the end. So that it becomes simple. So we are saying we are given SARS income tax at the beginning. We have got at the beginning is year 2020, and 2021 is representing at the end. So we check, we have got nothing for under current assets, but we have 27,200. So we come here, we are saying 27,200 is current liability at the beginning, 27,200. When we look for the other balances given, we have at the end 2021, says at the end 12,700. We see that current assets at the end 12,700. We are seeing it on the credit again. It's here, current assets at the end. So in that case, we now look for tax for the period, which is also supposed to be on the credit side. So we check it from the information given. We are told on additional information, one, net profit before income tax. We are given it is 988,700. Net profit after income tax, 692,100. So we can simply be able to calculate the taxation by saying 988,700. 988,700 minus 692,100. Then we see what do we get there. Let's just try to calculate it. And we are going to get 296,000, 296,600. If I am correct on that calculation, we can just try to verify the calculation that we have. Whereby we are saying 988,700, and then we subtract our 692. We get to 296,600. So basically, this is the figure that we have for our tax, which is supposed to come here is 296,600 on the credit side. So the balancing figure that we are looking at this part. So to get it, obviously, we are supposed to get everything. Whereby we are going to say 296,600, and then we add our 12,700, and then we add our 27,200. And then we're going to get to 336,000. 500. So basically, this is how we can try to simplify it in terms of its calculations. So we can just in the answer section show the working by adding everything that we have on the credit side. So we come here on our calculations. We are saying 296,600, and then we add 12,700, and then we add 27,200. And then the final figure that you're supposed to get is 336,500. So this is the calculation of income tax paid. So we go to the next one, which is going to be dividends. So on the second part, we are going to calculate our dividends paid in its format. So we're going to come up with our T account. Remember, every calculation that we make is derived from the T account of the shareholders for dividends in the sense of calculating our dividends paid in particular. So what we are saying here is account. So here in our shareholders for closing balance. So shareholders for dividends for the opening and closing balances will be under the current liability section. So we are closing balance period, credit side. Will be on the debit side is our figure that we are looking for to be included in the statement of cash flow. So likewise, we are also going to prepare a T account beneath so that we can just easily dividends paid. So in this case, we can as well refer to the 100,000 which is supposed to close in balance. And then it's 140,400. Then total dividends for the period. So we check if you are given the figures calculated. Total dividends paid and commented as per the retained income note is 317,400. We see that we have total dividends are given as calculated as 317,400. Remember, to get our total dividends, we say interim dividends plus final dividend. So this one is already calculated. We can take the figure as it is. So we come here. We are saying 317,000, 317,400. So we can check according to our figure that we have is 317,400. So that's correct. Get it as a balancing figure by saying 111,000 plus 317,400. The total that we get subtract 142,400. So let's calculate and see what we get there. So we have 317,400, and then we add it to 111,000. And then the answer that we get, we subtract 142,400. And then we are going to get it as 286,000. So we have 286,000. So in our calculation, we are just going to represent as it is, as we say, 111,000 plus 317,400 minus 142,400. So we got there. On no other section, we are going to say 111,000. On the calculation of what dividends paid, 111,000. We add 317,400, which is 317,400. And then we subtract 142,400. And then you get your answer is 286,000. So this becomes your answer for dividends paid. So alternatively, you can also use the formula of saying shareholders for dividends at the beginning plus interim dividends. If you are given the figure for interim dividends in the question, we are saying shareholders for dividends at the beginning is 111,000, and then you add the interim dividends for the present period. Then you get the dividends paid figure. You can do that if you the figures are clear. That's a similar calculation that you can make. Then according to our question now, we see that we are not given the information for interim. So we can just go the way that we went through. So going to the next question, we see that we need the fixed assets purchased. So fixed assets purchased, we go to the information given again, and we try to look at information. If you are told which fixed assets was purchased, we see that we are not having any information. We're only told that all the equipment was sold at carrying value. Some equipment were purchased during the financial year to upgrade the facilities. We are not told about any additions. So we are also supposed to open a T account that's going to lead us to the final answer. Obviously, this is going to be our fixed assets account, whereby we're going to put all the fixed assets there. So we are saying this is a fixed asset account. So from the fixed asset account, we are supposed to put a carrying value, carrying value balance at the beginning on the debit side, and then carrying value balance at the end, credit side at carrying value, at disposal at carrying value on the credit side, and then depreciation for the period, total depreciation for the period for fixed assets on the credit side. And then we are supposed to find our balancing figure as the additions should come as a balancing figure on the debt side. So as simple as that. So this is exactly as we are going to represent it as we try to find out about the fixed assets purchased. So this is with the information given, we can see that let's try to check. Carrying value at the beginning is 1,120,400. So 1,120,400 on the debt side. So this is the figure that we have. Then carrying value at the end is now 1,437,200. 1,437,200 on the credit side. So this is the one figure that we have. Then disposal at carrying value, we look for the information that we have. So our disposal at carrying value, we are given it information too, and it means all the equipment was sold at carrying value of 283,500. So this is the figure that we are looking for, 283,500. So we come here left with the depreciation for the period, depreciation for the year, 221,200. Our additions, we are supposed to minus 1,120,000. We're going to say 121,400, and then the figure that we get here becomes 821,700. So we're just going to summarize this working in our answer section. So we put our fix. I'm going to just summarize the working by saying 1 million, 108, and then we get 200, and then finally we get 800. This is how we are supposed to calculate it. And then 2.2.3 is going to be the last one, and we check according to the requirements of the question. According to the requirements of the question, which is saying calculate the net change in cash and cash equivalents. So we are also given the part of the our question, which is saying net change in cash and cash equivalents is the figure that we are looking for. So we start with inputting our cash and cash equivalents at the beginning. It's the figure that we are supposed to find in our question. At the beginning, it's here. So we see that we have got cash and cash equivalents 15,500, but we also have an overdraft of 124,300. So I remember an overdraft to be a negative figure, which is in brackets. So you can show 100 minus cash and equivalents at the end. Now we recheck at the 6,740, and we've got no overdraft. So say 1,700. The cash and cash equivalents this one, then we get this one. So it means to get this one, we are supposed to say this one minus 108. Obviously, is going to make a positive. And finally, simple as that. And then we get a total of 185,550. 185,550. So this becomes the last part that we have according to question 2. So of course, we have finished in terms of all the calculation of net change and cash equivalents. And then we are left with our last question, which is going to be our question 3. So moving on to our question 3, we are going to start on 3.1, which reads, choose an accounting concept from column B that best matches the analysis questions in column A. Write only the letter A to D next to the number. That is 3.1.1 to 3.1.3 in the answer. So you are given column A, you are given column B. So 3.1.1 reads, to what extent does the business rely on borrowed funds? So we know that this is a gearing, and we are given a risk and gearing on D. So we are saying 3.1.1. We have our answer is D. For 3.1.1, we are seeing that we have got D as our appropriate answer. Then we go back to 1.2, and we know that this is our solvency. So we have B as the correct response, which term debts in the next financial year. And this is our liquidity. We have got the next question in this financial year ended 2021. Calculate the following financial indicators on 28 February 2018. 3 marks. And then we've got return on shareholders' equity, 5 marks. So calculation of net asset value per share, we know that it's shareholders' equity divided by number of shares. So we go back to our formula sheet. That's where we can try to identify that formula. That formula, we see that we have got it here, which is shareholders' equity over number of issued shares times 100 over 1, and we are supposed to leave it in cents. So we come to our question, try to identify the shareholders' equity. So we have got information that we are given here that we need to go through. We have got shareholders' equity. Obviously, we are using the current period's information, which is 2021. We have got 4,488,000. Here's our shareholders' equity. So here we say 4,488,000. We go to check in terms of the denominator. Remember the denominator, we said it's number of issued shares. So we go back there. We see that the only way we can find number of shares, we go to additional information. We see that we are told that this is the share capital section, where we are told that on 1 March 2020, the company had 760,000 shares in issue. On 1 June 2020, 30,000 shares were repurchased at 510 per share. On 31 October 2020, a further 150 shares were issued. So as simple as that, which means initially we expect it's going to be a minus, we say that 8,000, which is going to be over to our formula sheet. We are supposed to multiply, come back 10 shareholders' equity, return on shareholders' equity. And remember, for return on shareholders' equity, we also try to find out about the formula for the shareholders' equity for the current period plus shareholders' equity for the previous period, the total, we divide by 2, and we get the average. So net income after tax. So we can go into information given. This one is the net profit after tax, 545,600. We have it here for the current period. So we come here, we see, remember we are saying it's over average shareholders' equity. So it means we have to add the shareholders' equity. Shareholders' equity is the denominator. We are saying 724,000. The total that we get, we divide by 2. So we come to the answer section and do a search whereby we are saying 488,000 plus 724,000. So this is exactly what we have. And then net over 1. So we see what we get. We calculate there. We see that to 2 decimal places, our answer we're going to get it as 2 decimal places. So this is what we have on that part. But going back to our question, you see that from the calculation of return on shareholders' equity, we've got 3.2.2, which is saying quote 2 financial indicators with figures and trends that can indicate an improvement in the liquidity position of the business. So you have to first try to know which financial indicators relate to liquidity analysis. So we can look for current ratio. We can look for acid test ratio if it's there. We can also look for average data collection period as part of the analysis. So we go to our answer section. Before we go to that, we need to find out about the ratios that we are given in the question, the indicators. So you see that we're given current ratio, which is showing that if you go back to the question, it's saying explain two financial indicators with figures and trends that indicate an improvement in the liquidity position of the business. So obviously, the indicators that we are going to quote should show an improvement. So if you come here, we are now saying we look for the current ratio. We see that it has improved from 1.4 to 1 to 1.9 to 1. So you are supposed to indicate that in your answer section, and you are supposed to show the margin of the increase by how much did the current ratio improve is also something that we have to take note. So we go to our answer section. So we are saying in current ratio from 1 to 1.4, we get 0.5. Then I would try to look, I will say that it has decreased. So it means the business is getting its money in lesser days. Debtors are paying the amount the amount that they are owing in lesser days. So it becomes an advantage from the business point of view as they are going to have their liquidity position enhanced. So we are saying it has improved from 57 days to 30 days, and obviously we see by how many days it improved by 27 days. So we go to our answer section and collection period from our 57 days to 27 days. So this is what we have, and then we go to the next question. Which is saying the company paid a large portion of the loan. Explain why this was a good decision. Quote two financial indicators with figures. Obviously, when we have issues of the loan, we are going to look at the debt to equity ratio, and also we have to look at the return on total capital employed on what percent we have. Compare obviously on the part of return on total capital employed, we are comparing at the level that we have of return on total capital employed compared to our interest rate. So remember, it has to be greater. Our return on total capital employed has to be greater than our interest rate to indicate a positive gear. So as we are supposed to explain it from that point of view, and then the debt to equity ratio should also show a decrease so that it has improved. So in other words, we are saying the proportion of our debt is decreased. So we can go to our financial indicators and try to see. We start with our debt to equity ratio, whereby we are seeing that it has decreased from 0.5 to 1 to 0.2 to 1 by 0.5 minus 0.2, which is 0.3. So that's the first explanation that we are supposed to give. We come here on the first point to 0.2 to 1 by 0.3. And we can just add on that interest than our interest rate, indicating a positive PI. So we can as well try to put that as our second point on total percent above the interest rate of gets 2.3 for the dividend payout policy over the past 2 years, provide the possible reason for the policy adopted court figures. So obviously, on the dividend payout policy, you are looking at the proportion of dividends the proportion of earnings that are being used to pay dividends. So basically, that's what we have. So basically, we are saying dividends per share over our earnings per share. So this is a representation of the proportion of our earnings that are being paid as dividends. So obviously, if we want to maybe to make our shareholders happy, the dividend payout policy, we have a dividend payout being a higher proportion to indicate that more earnings are being given as dividends. So basically, this is the kind of explanations that we are supposed to come up. So we go to our current period share 32 indicates a clear 50. It indicates there that it's a 50%. So that's what we have. And then for the 2020, we're going to say our dividends per share 52 over 65. We can just try to see dividends per share is 52, and then earnings per share is 65. So we've seen that this is what we have in terms of the previous period. So we can calculate the percentage there. So we go to another section and try to come up with the explanation according to. So basically, for 2021, you're going to see that if you say 31, and then here on the previous year, that is 2020, you can also make a calculation by saying 60 80%. So we are seeing that the dividends payout ratio is decreased from 80% to 50%. So what it means is in the current period, a more proportion of the earnings is being retained as compared to in 2020, where we have only 20% being retained, and in 2021 it's 50% being retained. So this is how we are going to come up with our explanation. So we are saying going to our next, we are saying on the first point, we are saying the company 31 cents out of like what we calculated there, out of 62 cents end is 50%. 20 of the calculation that we have, 52 out of 65 cents. In brackets, this is 80%. So on commenting now, we are seeing that now a greater proportion is being retained. Obviously, is being retained for future expansion of or future growth of the business. So a bigger proportion being retained for future expansion. So reason for the difference that we have in terms of dividends payout ratio is that efforts are being made to increase profitability or to address cash flow problems. So this is how we can come up with a reason. Remember, they are saying give a positive. The reason is that efforts are being made to increase profitability, to address cash flow problems, and also you can come up with a point saying a bigger percentage was retained for future expansion or growth. So basically, those are the reasons that you can try to come up with on 3.2.4. Then moving on to the last, explain whether financial indicators with figures in your explanation. Share buyback price, which is 5 rand 10 cents. So was it fair? Is the question. You compare it to the net asset value. You have to calculate this net asset value, and the figure that we got there for the calculation of the is 510 cents. So we are saying, and we are also having the distance, which is also equal. So they are equal, which means it's fair. So on our explanation, we are going to say the buyback price was 510 cents per share, equal to net asset value of 500 cents. So the price was fair. So we can just try to come up with that explanation, whereby we are saying the buyback price is fair. Compare it with the market price that was 15 cents. So we are seeing that at the buyback now is lesser than the market price on the JSE, which is also a favorable position. So on the second point, remember our question needs 2 points. They say per share. Well, shares have been bought back. This is more than the buyback. Share buyback of 500 that we have. So basically, this is become the last question that we have according to this question paper. And let's change 100 marks. That is our March test of marks. So hopefully the video was helpful. Please let's not forget to subscribe and share to our channel. And let's take more typical examination questions will be uploaded on this channel. So let's stay tuned. As for this video, I'm signing out. We'll meet again in the next video.